Hello, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here this Sunday. Now, here's what's going on. We've got the last lead in. I would say it's the last lead in before the real crisis comes. And what I mean by that is, let's get started. Let's take a look. Let's open up the charts right here. And, take a look at what's going on. The United States and China are coming to some sort of a little trade truce. Now, they warn you that disputes remain, but they've come to some sort of a little bit of a trade truce right now. It says Beijing companies have welcomed the United States-China trade truce as a possible step toward breaking a deadlock in a 15-month-year-old trade war, or tariff war, while economists caution that there is little progress toward settling core disputes, including technology that threaten global growth. But this little white flag coming out, right now, and a little settling of this is going to really help markets, and that's my point. Let's take a look at this. The Fed the Fed is using a very strong tool in its fight with the repo market. The central bank will buy 60 billion of Treasury bills a month, exceeding some expectations. So what we're looking at here is this repo thing that's been going on with the Fed injecting money into the economy is ongoing and continuing. It's going to be 60 billion of Treasury bills a month, Now, what else do we got going on? Quantitative easing or not quantitative easing, impact of Fed bond buying will depend on Treasury. What they're doing is the Fed's gone back to quantitative easing, but they're not really calling it quantitative easing anymore either. So, one by one, all of these things, a little truce in the trade war, we get the Fed pumping money into the repo market, the Fed going back to quantitative easing, and to add icing to the cake, what we're looking at here is low consumer inflation opens the door for Fed to cut interest rates even further. So we got about four things here impacting the market simultaneously. What am I expecting as a result from all of this? I'm expecting the market to get on to start to pick up. But, at the same time, we've got the world sliding toward a recession on the other end of what we have going on with the market. So in the short term, what I'm seeing is the market's going up. And they could go up substantially. This is only taking the market up for a greater fall, because the world economy is turning over. And when is the big question mark now is when is the world's economy going to actually turn over? And there's something else I want to point out to you guys. I want you guys to take a look at this. This is the 10-year Treasury constant maturity rate on the U.S. 10-year. Now, when we look at this, what we see is we see this going all the way back. This chart goes all the way back to 1980. Look at what rates were back in 1980. They're over 15%. That's back when you could make some interest on your bank account. Back in those days. But because this is an inverse sort of thing, for us to really understand this in logical terms, we have to flip it upside down on its head. Take a look at this. This is the same chart. We're just looking at it flipped upside down. Okay? Exact same chart. What we see here is a rally in the U.S. 10-year Treasury bond going all the way back to like 1980. That's what we see. And this is why I say the bonds are in a hyper bubble. When we look at the chart upside down, we can see this long-term rally, not a rally, a bull market into Treasuries, going back all the way back to the year maybe 1981, 1982. That's a long time. That's a long bull market. Nothing goes up forever, especially when you have to take into the consideration that these treasuries are now connected to an entity that is very deep in debt and getting deeper in debt by the day with no ability to ever pay off that debt. So because they can't pay off the debt, okay, the debt's growing, it's expanding, and the way the debt is actually growing and expanding, it's actually growing exponentially because there's debt being piled on top of the debt. It's basically doing what they call a hockey stick maneuver, where it starts to go up exponentially. The debt's going up exponentially, so these treasury bonds are connected, directly tied to that debt. Now, they say that these treasuries are the world's best safe haven asset. But they're only worth as much as those dollars are going to be able to buy. There's only two ways out of this situation. They can continue to print, and they can make good on all of these treasury bonds and everything else and all the unfunded liabilities the United States has, and make good on everything by continuing to print, or they can choose the other way, which is to default. They're not going to default on it. They're going to continue to print. They're just going to continue to stimulate this. So what you're going to be doing is when you buy into something like a U.S. Treasury, you're going to be paid off in dollars, and those dollars are going to be worth increasingly less and less and less. Because the Fed is after interest rate. Look, they tell you right here. It's right here. It says low consumer inflation opens the door for Fed to cut interest rates further. Well, is it really low consumer inflation? You guys are out there and you guys are spending your money. And do you really think the consumer inflation is low? I want to tell you what. Okay, I got a little bit of bronchitis, So I went into the grocery store today. I wanted to get some Campbell's chicken noodle soup. The cans are just regular old cans of Campbell's chicken noodle soup. I remember just maybe 5 years ago, 50 cents a can, for Campbell's chicken noodle. I went in there this morning, $1.99 per can. I had sticker shock. Because I haven't bought it in a couple years. I haven't bought it in like maybe 4 years. I haven't bought any Campbell's chicken noodles. So I wanted to get a little bit of Campbell's chicken noodle. $1.99 a can, and it was 50 cents a can. That's 4 times. I'm going to say the last 4 years. 4 times in 4 years. It's went up 4 times in price in 4 years. Now what's happening is we are like the frog that's being slowly boiled. He thinks he's in a sauna. He thinks he's in Tahiti, and he thinks he's in luxury. But actually, what's happening is this consumer inflation is eating away at everything we have, and they say it's low consumer inflation. They say they have a higher target for this consumer inflation, a higher target range for this consumer inflation. But we're here. We're on the front lines. We're having to purchase things in the grocery stores and stuff, and we can see the prices going up daily. They say it's only 2% or less per year. But if that's not true, because we're watching prices double about every 3 years. And that's about 30% per year, especially on food items. We're watching the price. I'm going to say it's probably going up 20-30% per year right now. But they want more. They want more consumer inflation. You know what's happened? We've gotten to a point now where government's basically out of control, and they've lost control of the monetary system as well. And the monetary system's nothing but a Ponzi scheme. And at this point, they got to follow through. They can't back off the pedal. They got to follow through. They got to keep raising the debt ceiling, every time it comes due. Otherwise, the entire world's economy will crash. And they got to keep pumping that money out there, more and more and more. It's destroying the savings of the middle class completely and utterly. Everybody out there is going to end up with nothing in the end, unless you find a way of protecting yourself. At a certain point, everybody out there, the vast majority, your neighbors, your friends, your neighbors, right now they're not into this. Like they don't know about things like Bitcoin, and they don't know about gold and silver right now, right yet. Are you going to sit around and wait until they find out? Because when they find out, you're going to pay a hell of a lot more for these things that are non-dollar, the way of getting out of the dollar. Because when they all start to find out and word starts to spread, and it will, because when this inflation starts to get higher and higher, and it really starts to chomp at them, they're all going to start talking about it too. More and more people are going to get on board. If you wait too late, you're going to pay a lot more for these items. I am absolutely amazed and astounded that the gold and silver prices staying this low this long. I'm astounded by it. Now Bitcoin. There was a time not very long ago, and I remember this, when everybody was astounded when gold and Bitcoin were the same price. 1 ounce of Bitcoin, 1 ounce of gold would buy 1 Bitcoin. They were the same price. Everybody was astounded that Bitcoin got that high. Well, now Bitcoin is shot way beyond gold. Gold's still staying down. It's still down there like $1,500. Bitcoin is like, what is it, 8,300 or something like that. It hasn't really caught a bid yet for gold and silver, but all three of these things, gold, silver, and Bitcoin, when all of these masses of people out there don't know about it right now and have their money in the bank, suddenly start to realize that money that they got in the bank is going to become worthless, because the government has been running a global Ponzi scheme all these years, and we're in the final stages of this Ponzi scheme, and inflation's going to go through the roof. It's going to be a mass exodus all at once. And I'm going to tell you, if you wait until then and you think you're going to go out and get some, you're going to pay one hell of a lot more than you can pay right now. Because there's going to be heaps and crowds of them wanting it. That's if you can even get it. If you wait too long. Because this is one of those things where the word's not really out there yet. They haven't really felt this consumer inflation yet. But the Fed's telling you. The Fed's saying consumer inflation's low, and it's actually not low, but they're telling you that because they want it higher. And they're going to make it higher. They have targets to make it higher. Listen, thank you guys for listening. Give me a thumbs up, and we'll catch you guys in the next show. Bye-bye.